This is the 10-Minute Contrarian Podcast. This is VP. We are a solutions-based podcast, diving into the world of contrarian investing and alternative finance. You can find us hosted on the No Nonsense Forex YouTube channel, NoNonsenseForex.com, and podcast players everywhere. Episode 206 is brought to us by Bybit. You can kind of trade anything you want on Bybit nowadays. It's pretty great. But what you're getting on top of all these options is one of the largest, most well-capitalized, can stand up to any hack platform on the planet. And you get extra bonuses if you click my link to join it, which you can find down below in the Bybit blog, which I have a link for in the show notes. Read over the blog, make sure it's for you, make sure you can participate. Americans, I'm sorry, you cannot. And then click my affiliate link at the bottom, sign up, deposit, get trading, and those benefits become yours. You can trade on a platform and get very little, or you can trade on a platform and get a lot. You're going to trade anyway. May as well get rewarded for it, because with Bybit, membership has its rewards. It is the 10-Minute Contrarian Podcast, and this should be, I say should, be a short episode. We got family stuff going on this week, and I'm actually shooting this on a Thursday, and schedules have changed. And this is strange for me because in my world, I set the schedule for everything, and right now I don't, and I'm not used to this. So I have to adjust on the fly. But that's good, because I had this episode chambered just for a situation like this. And it is a concepts episode, which people like. And anytime I talk about technical analysis at all, it seems to go over pretty well with people. So, what I meant by the title of this episode. Now, we've been talking about the monthly chart for a while, but it hasn't been like that long. And with the monthly chart, like, you would have wanted to have heard about this like maybe 3-4 years ago, so you can get in on any investment you want to get into at the time you receive a signal. I mean, who doesn't, right? But, you might be learning about different investment vehicles, whether it's from this podcast or other places, and then you go look at them on your monthly chart, only to find out that the perfect time to invest in this thing was 4 months ago, or a year ago, or maybe just even 2 months ago, but it's already ran, and now it seems like the value is gone from it. So I guarantee you this is a great episode, I think, because this is something that I will bet a lot of you are facing right now, and a lot of you have encountered in the past. And not just the past, the future. You're going to become very bullish on different things as time goes on. And then you're going to check your charts. And sometimes it's going to be in negative territory, and it's just not time yet. Sometimes it's going to be the perfect time or approaching the perfect time, and that's exactly what you want. But there's also going to be times where you were just too late. Or at least the chart says you were. So what do you do in this situation? Do you wait for the monthly chart to go into the negative and give sell signals, and then wait for it to come back up from the bottom and give you a buy signal again? How long is that going to take? That could take years. So I would say this is a real problem in our space. Now, off the top of your head, you might have already come up with one or several solutions to this problem, so I might be just preaching to the choir here. But I have come up with 3, and I will share them with you. Some of them might already be a bit redundant. One or two of them may have been something you've never heard before. So, without further ado, let's go ahead and get into them. Now, for my students of the no-nonsense Forex way of trading, these first 2 are going to be very familiar to you. Maybe you have thought of them in this monthly chart endeavor, maybe you haven't. But the first one is to partake in a continuation trade, which if you're plugging your trading algorithm into your investing algorithm, you should be getting at times, usually on your main confirmation indicator. Now, I can already see, because this one video, and I take credit for this because there were a lot of questions on my continuation video. A lot of people still had questions unanswered, and that was my fault for not addressing them in the video. A lot of times I get some dumb or lazy questions on those videos, but this one wasn't the case. This was just me neglecting to cover all my bases, which I always try really hard to do, but I don't always get it right. And if I get one thing wrong or I miss something, I'll put it in the pinned comment on that video. But sometimes there's just a bunch of stuff that I didn't think of that you guys did think of. So when it comes to this continuation move, I don't want you all to overthink this. Like, well, where do I put my ATR and all this kind of stuff? Look, this is not a trade. This is more of an investment. It is an investment that we are entering like we would a trade, But your rules do not have to be as rigid here. You could almost just make something up on the fly, and you would still have multitudes more discipline and money management baked into your investment/trade than anyone else on earth who is doing the same thing, who is not already a financial institution that already has their money management baked into everything they do. So I don't mean to sit here and say, shit, just, make something up. It'll be fine. No, I'm kind of saying that, but be reasonable and smart and consistent across the board when you do. Remember, a great way to achieve this is to use percentages, because percentages don't care how volatile something is. They're just percentages. Now, if you have chosen not to use a baseline in your algorithm you use for investing, that's fine. I suggest maybe look into confirmation indicators, which will give you this, kind of on their own, similar to what a MACD would do. Those of you who can imagine a proper MACD off the top of your heads know that it has a zero line, and then what you will see on the buy side is both lines going above that zero line, but then crossing downward amongst themselves without going below the zero, and then crossing back upward at a later time. So if you feel like I didn't describe this very well to you, I will give you a visual. So the majority of you listen to this podcast on audio. Just know that it also goes to YouTube. And in the YouTube thumbnail, I will put a MACD on the front and circle the moment in time where this happens. Now, as I said before, the MACD is certainly not a bad indicator, but you can do way better. And there are plenty of other indicators out there which will give you the same type of continuation effect or something very similar than the MACD will. So if you're using a baseline, this should be pretty easy. If you are not using a baseline, it is certainly not out of the realm of possibility, because if you plug in one of those type indicators now and you look back, you can see that a lot of the really big moves out there were continuation moves, and you can get in on those too. So if you go this route, make sure that you go ahead and put these stocks or these crypto tokens on your watch list and make a note. Said, hey, we are looking for a continuation trade here. At the end of the month, be on the lookout for one. If you have any further questions on something like this, AI is actually pretty good. ChatGPT and Grok both seem to know me and my material pretty well. So if you ask the right question, I think you can get a pretty good answer from them if you try. And then there's always Discord, the No Nonsense Forex Discord forum server, which you can find a link for in the FAQs over at nononsenseforex.com. Now, the second method, which no-nonsense Forex traders may be familiar with in terms of entering a trade that you were a bit too late on the monthly chart, and can anybody guess what it might be? It's drop down to the weekly chart. Now, understand me very clearly here. Only drop down to the weekly chart in this particular scenario. Don't get what I called in the course pullback-itis. Don't sit there and get a signal on your monthly chart and say, well, I'm going to wait for the weekly to give me a perfect signal and then I'll enter. No. This is how the most potential legendary investments of your life get away from you, is by you trying to put too fine of a point on it. The monthly chart will always trump the weekly chart in this particular context, in my opinion, at least. And this hasn't been tested enough for me to really know, but the testing I have done has shown the monthly chart is superior here. And it really is the perfect point, in my opinion, because once you start getting beyond that into some like the 2-month and 3-month, 6-month charts, things really don't give you what you're looking for because it's just too long of a period of time. You know, you think the further out you go, the more advantageous it gets. It doesn't. You know, there comes a point where too much is too much. And in trading, I think that's the monthly chart. And in investing, I think that is whatever is beyond the monthly chart. Just too long. But the monthly chart is great. But if you find out that you might be a couple months past where you should have entered, go to the weekly and see if it's about to give you a long signal. It might be. And then make sure you're tracking it that way. Or 2, simply put it on your radar, put it on your watch list, and make a note that says, hey, we're getting ready for this thing to go negative on the weekly and then go positive. And if, when it does that, it is not super far away from the original point of entry, then I think you can go ahead and enter. And then take the weekly chart off immediately after you do that and manage your investment on the monthly chart. Again, don't forget, this is not no-nonsense Forex. These are not dyed-in-the-wool rules that I absolutely mandate you follow for a couple years until you decide to either amend certain portions or eliminate certain portions or go a different route altogether. No, these are just simple guidelines that I personally recommend. And just know I do not have the level of experience in this arena as I did back when I spoke about Forex. But I do know how to test. I do know technical analysis quite well. And based on those things, this is what I can recommend for you. But they're just that. They're just recommendations, just guidelines. Now, the last one, and this is going to sound a bit casual, but especially when it comes to crypto. Now, you guys know how crypto works here on the show. We don't really chart it because it's too fast. Even Bitcoin's too fast for my liking right now. It's getting close to being chartable, but even when it does, I would like to see more from it before I say, okay, I can start managing my Bitcoin this way if I want to. Problem is, with crypto, I don't want to. If I enter something in crypto, I am in it for the long term. I really don't care what the charts are telling me. I know we're going to have really big bear markets. I've been here before, and I am fine with that. I will simply use those bear markets as opportunities to buy more. And I won't be using my charts then either. On this show, I simply tell you the way I do things, and then you can kind of go out and do them however you want. But the way I do things here is crypto does not involve charts. It is buy and hold long term, with the full understanding that I am probably going to be waiting a very long time to get the result I want. So if you are looking at a monthly chart for crypto or something like this, let's say you're super bullish into copper and you don't care what it does, you just want to start accumulating positions now. Because like me, you are super bullish on copper for the next 10 years. Then you know what you do if you miss out on a monthly signal? You just invest in it anyway. Close your eyes and put it in. That's what she said. But you know what I'm saying? Like, for me, especially with things like gold and Bitcoin, and to a lesser degree Litecoin, I just ask myself one question. Which of these two things is going to be higher in the future? Gold or my dollars? Bitcoin, Litecoin, or my dollars? And that answer is never dollars. So I often move my dollars from point A to point B. Then with something like copper, I'm like, well, you know what? If there's one thing I've learned, I don't have a very good bead on the price of copper. I never have. As a trader, as an investor, we've been good here on the show in predicting fugazi runs up. But apart from that, your guess is as good as mine on copper. But I know I want some. And I know if it does what I think it's going to do, then prices are going to be way higher than they are right now, even if they seem a bit high and or inflated. Now, what am I more scared of? Losing my money on a copper trade or having this thing that I have been super bullish on super long term up and run away from me? Now, the answer is B. So I don't ask questions because in my mind, I'm never really too late until I am, and that day has certainly not come. So stop trying to put too fine of a point on things. This is you being fearful. This is you being a cheap ass. Because even if you don't think you have those tendencies in you anymore, I'll bet you do. When the rubber hits the road, I'll bet you do. I'll bet you it plays a part. You can't do it. I get commenters asking me, when should I buy Bitcoin? I'm like, right now. Well, first I asked them, do you plan on holding it for a while? And they're like, oh, yeah. And I'm like, right now. The hell are you doing? Well, it might drop. Yeah, it might, and it probably will. What if it doesn't? Now you don't get to take part in the future of money, which has a finite supply. If I were you, I would get my piece of that supply any way I can get it right now. Because we all know how this goes. You're going to wait for it to drop to 80. It will, and then you will have absolutely no interest in buying. We've all seen the meme. The big line for $110,000 Bitcoin and the non-existent line for the $80,000 Bitcoin. Do you really think somebody who has never done this before is going to have the sense to go against that meme. Of course not. But neither will you, in all likelihood, because sentiment sucks at the bottom. That's why it is the bottom. So those are your three options for long-term trades and or investments that you feel like you may have missed out on, either technically or just overall. You may think it's too late. It is almost certainly not. And with these three options in your arsenal right now, you will have the courage and the arsenal to ignore FOMO and instead be able to enter these positions rationally. So you can participate in the things you want to participate in, yet still do it at a fairly reasonable price. But look, with most of these things, it kind of doesn't matter, because really no matter when we get in, if they do the things we expect them to do, getting it at any time this year, whether it's at a yearly high or a yearly low, should not really feel crazy to you. Because the goal is to be able to say years down the line that no matter when we got in, we certainly weren't crazy. We were just early.